So this strategy works on bigger time frames and lower time frames, so basically on every time frame. But here we are going to start today with the lower time frames. So here an example on the bigger time frame. The overall trend is here pretty bearish, and here again the market goes to the downside, and suddenly here is the flag where the market moves to the upside and here forms a trend line with higher highs, higher lows. And initially here I'm looking for some sort of a resistance double top and then looking for shorts. So here if I go down to the 50-minute chart, so here is the area where the market went to the downside, and then I see here this bearish flag going to the upside, and here suddenly the market forms kind of a double top right around here. So we see the market coming back to this structure right here where we had here first kind of support line area, and then the market bounced off slightly here the second time, fell a little bit lower but then bounced to the upside here. The third touch didn't come too close, but then here we broke through, here went for the retest, suddenly went to the downside. So I want the market to come back to this area, so right around here, and then we can see our double top being formed right at this area, and here then initially looking for moves to the downside. So now we go to the lower time frame, since this can be used on the lower time frames, and here is the strategy now based on the lower time frames, since this was just a big overview how it looks like, the bearish flag and then the kind of double top and then the market breaking to the downside. So here now on the 50-minute chart we can see the market is overall bearish, so I'm looking here for shorts. And now on the 3-minute chart at the lower time frames, so now here I see the market forming higher highs, higher lows, so we are here slightly bullish and then initially breaking to the downside here, breaking this structure right around here, then we come up to this area. So what I can see here is some kind of head and shoulders pattern, with here the right shoulder being slightly lower than the left one, but initially here what I'm looking for is shorts at the retest of this area right around here. So here I can see the market broke after the head, pretty bearish with these two candlesticks. So here somewhere I want the market to come back. In this case the area is pretty big, but then again here this is the whole left shoulder, and here the market breaking to the downside, and then suddenly here a bit of a trend area if we take here this line. So we see here now the market pushing to the upside, so eventually here somewhere should be a bearish flag, so right around here, and this is where I'm looking then for the double top and then the market to continue to the downside right off of here somewhere. So now I see the market coming back to these two candlesticks, and here the 3-minute chart, this candlestick pretty huge, and then what I want to see is a rejection right around here somewhere. So this here should be my highest point, somewhere around here, maybe slightly above the left shoulder, since I don't know where the market will exactly come back to, but here this is already the area where I can look for bearish signs for the market to go down. So here now this could be the left shoulder of my double top. So now looking what the market does, and so I can see here now this could be a left shoulder, since here the market broke to the downside right at this area here, this huge candlestick. So I want the market to come back right to these levels and then give me a bearish sign, and this is where I would enter. So if I zoom in here a little bit, and now if I add the EMA, I can see here the market slightly above the 200 EMA. Let's add the RSI and the MACD here as well. And again I want here now a rejection, since I have here a first kind of bearish candlestick fully engulfing, but not enough to enter. So here we are coming back to this area, so now the chances are that the market will get rejected or break to the upside, so maybe target the next resistance area right around here. So initially I want here a third touch trend line as well. Again it's an area, so around here. here I have a fully engulfing candlestick breaking on the right shoulder, since here this is my left shoulder, right here. And I had on my left shoulder a fully engulfing candlestick, but again I don't want to enter on the fully engulfing candlestick on the left shoulder, but on the right shoulder. So here the market came back, formed the right shoulder, and here now a fully engulfing candlestick, which is here where I want to enter the market. Again, not here on the left shoulder, but rather here on the right shoulder. And on top of that, compared to the candlestick right here, the left shoulder fully engulfing candlestick, here the right one was here eating up all the three candlesticks before. So now here at the same time, if I take a look here at the RSI and the MACD, at this candlestick the RSI was above the 50 levels, and here we just barely started to come into the red area. But with this candlestick here, suddenly the RSI broke below the 50 levels, and here the MACD is getting to the 0 levels, which here for me is a sign that the market will go to the downside. On top of that, if I here draw a trend line from the top of the head, I have here my third touch, since here I had 2 wicks, 1, 2, and here my third touch. So this is my confluence number 1. Here the retest of this area, the right shoulder, second confluence. I have here now this fully engulfing candlestick, my third confluence, and it is on the right shoulder, and then the RSI below the 50 levels. So my fourth indicator, my fourth confluence, as well as this bearish flag. So after this red candlestick on the right side, I can assume that the market will go down to the downside. But what I want to see is the market retracing to this area. I could enter here the first time and see what happens. But initially what I want to see is the market to come back and then give me a further confirmation, and then I want to enter at the retest of this area. So right around here I want to enter here at this candlestick. And so since I can assume that after this huge red candlestick, which was engulfing these three green candlesticks and even slightly touched the fourth one and this whole structure, and again the RSI here is below the 50 levels, and if I draw here my trend, I can see here the market forming higher highs, higher lows, and here was my last low right around here before forming my new last high, which was the left shoulder, and then the right shoulder didn't form a new high, but again we formed a double top. So I want this area here, this structure, to be broken. If we would go down to the 1 minute chart, which we can do, we can see here this was a new high, this was a higher low, and then here the market formed a new higher high. So I want this structure to be broken. So now quickly, if we go to the 1 minute chart, and so here now on the 1 minute chart, we can see here the market broke out of this consolidation pattern, forming higher highs, higher lows. And here this was my last higher low right here, and then the market here went to the upside, forming the again left shoulder of the double top before we had our bearish candlestick on the 3 minute chart right around here. So what I want the market to do is here initially breaking this structure, since here if we are forming higher highs, higher lows, then seeing this consolidation pattern, I want some kind of a reversal. So I want the last higher low to be broken right around here, and then I want the market to come back and retest the area. So after I break here, I want the market to come back to the upside. And now if we let the market run, so here was our 3 minute chart big candlestick, which was pretty big and engulfing on the 1 minute chart as well. And here now we broke our structure with this candlestick. So now what I'm looking for is for the market to come back, and here we can see the market broke below this area and here now is pulling back. So here somewhere now I'm looking for my entry. So I'm going back to the 3 minute chart once again. So here was the break on the 3 minute chart, breaking my last structure. Again, this was my last higher low before the consolidation pattern. So here I can assume the market will somehow reverse, and again this here was my double top of the bearish flag, and here now I have more confluences for the market to go to the downside. The last structure break right around here. So here now I want the market to come back. Here we had our break. So the first pullback was this red candlestick. So I want a third pullback maybe, and then I want to enter the trade. So if I let the market run here, so the market here came and touched the second time, and maybe I could enter right here, maybe even at the first pullback or the second one. So initially here, now if I place my entry after this first touch, and let's see what the market does. So it's here again, this is my last high before the new high, so somewhere around here. Maybe the market will come back to this area, then I could enter here, and then my take profit would maybe even be better, something like this. So here the market actually came back right to the left shoulder, and here now this is another confirmation for me that the market will go to the downside again. We had here the 3-touch trend line, the right engulfing candlestick on the right shoulder, the RSI below the 50 levels. Again, it was a double top bearish flag, so initially the market was bearish here. This whole area was a right shoulder by itself. Here the left one, here a head and shoulders pattern. So this is kind of my fourth confluence. And here if I zoom in, now I have here the structure break, my fifth confluence, and here the sixth one, again a left shoulder, a head, and here the right shoulder. So my entry number 1 was at the low of the candlestick right here, could have been at the second touch, and here the third touch was the right shoulder. So I have kind of two entries, depends which one you would choose. Again, once the market is on and you're trading live, you can never 100% say where you want to enter or will. If you're in front of the screen, maybe it's easier, but it always depends. So again, here now I have two choices. I can't say for sure where I would have entered on a live trading, but here, because in my case I didn't enter at the right shoulder, I entered at the low of this candlestick, but the right shoulder would have been another option. So if I go right here, then my take profit here would be maybe, well, the first one obviously here, this structure, but here the take profit wouldn't be too great. I wanted to maybe not too bad, to be honest, but here maybe this one would have given me 1, 2, 3, and here on the better entry even a 6.45. But initially, if we let the market run, we can see here the market coming back and forth at the 200 EMA, and then looking for the break to the downside. So here now the whole structure was broken by this candlestick, and since I saw this huge break and then suddenly this wick popping up, I entered again here at the low of this candlestick, and my exit was somewhere around here. So my risk reward was slightly 2.5. Again, if you would have caught the better entry right here, maybe a 6 point, depending on your entry and exit here, 5, 4, 3. But initially this was the trade with the bearish flag and the double top. So again, this was the video for today and the new strategy. So hope you guys enjoyed it. Again, the most important thing here was to find a lot of confluences coming together, finding the right momentum for an entry, and maybe the most simple and most important thing is to know that the trend was bearish, so you look for bearish entries, so you look for shorts here.